Good evening, all. Ira Epstein with your metal market update, and this update is for Monday, and we're sitting here now at October 21st, 2024. What are we now, some 15 days away from when you can vote for the U.S. president? That's about where we're at. The time, about 6:20 as we're talking. Over the weekend, I did do a special report for you, and it's on the currency, but the dollar. And it is the dollar index that I did, and I did something I've not done ever before. Instead of bringing up charts, instead of bringing up where the price counts might carry the market, I wanted to talk about one thing and one thing only. How does the market do just as you get into the 2-week period in front of the presidential election? How does the market do right after the post-election? How does it go up or down after that? And what does it do then into year end? So what I did is I used our good friends at SeasonX, and I went in and looked at 53 years worth of data for not midterm, U.S. presidential election, then 25 years, and then 15, because that made sense. I can get common. I could have gone a little shorter, but I think 15 does the job as short as you have to be. And it's fascinating what you see. The report is up on our website. It's at iraepstein.com. And when you look at the page, look at the very top left, you'll see currency report. Go in there and take a look. It's only up through Wednesday. After that, it's gone. This is timely, so please pay attention. You can also move your cursor at any point up here. And when you do so, you'll see an icon, and that'll take you to that place as well. While we're talking here about news of types, tomorrow morning you get what I call the secondary news markets. The Red Book Group, it's been running about 5.5% increases. The Richmond Fed, they had a monstrously bad report for September, down 21. Will it see an improvement's the big question. You know, we saw the New York Empire, remember that? It went up very big in what was it, August, then it collapsed in September. So it'll be interesting to see what it does next time around as well. And then we get to today where we had a correction. So Monday, we had a reversal down. Often if you have a big day on Monday, you get a Tuesday reversal, which could imply, and I use the word could, I'm not saying it'll happen, that you'll get a bounce from these lows for tomorrow. If you were a big up, I'd say down. If you're down, I'm going to say you can come back up. On the energy markets, not doing an awful lot one way or the other. Everyone is now waiting to see just what's going to happen between Israel attacking, and they are really going after a lot of the banking system in Lebanon that Hezbollah controls. And of course, they're nonstop in Gaza as to what they're doing. And this is all ideally in front of the election because they don't know who's going to win, where they'll be, and what Israel's doing is they're putting full pressure on it right now. Whether they attack Iran before the election, that's anybody's guess. I don't know. I mean, politically, the answer is no. Strategically to them, the answer might be yes. We'll see which way they want to go. Bonds and notes. You can't fight the fact that interest rates keep climbing. You're now, instead of 3.6, 3.55 in the 10-year, you know where you're at? 4.13. Mortgages up, you're shutting down the housing. If you look today, you saw that the housing, the ETFs and the Toll Brothers and so on, most of them are getting hit at this point because interest rates have climbed. Now, is this just the aftermath of the Fed doing, instead of 25 basis points, trying to get ahead of the curve when it made its last cut and going 50? And the question is, do they have to go with another cut in November? No one knows yet, but we're going to start getting data. We're going to get the flash PPI numbers coming out this week. We get the Beige Book coming out this week. Next week, we get some CPI, core PCE. We want to see these numbers. They're going to be very, very important. Okay, so let's take a look at what gold's done. If you'll recall my gold report about a month ago, I told you I thought the market was going over the 2,700 level. If you closed right now, because this is a weekly chart of just the last price, closing price on any given day, 27.23, an all-time high. Gold has taken off, and it's been taking off. This was the pattern that we were looking for, and it did materialize. You can see how the market has come up here. You saw, and I was bothered today when I saw it, that a lot of open interest is surging in gold. A lot of people buying the ETFs, a lot of people buying the gold futures. And whenever you get that, you're starting to set the market up for a reaction. If you step with it, for example, when I was putting out the morning update, I was telling my traders, you got up to 27.55 early on, and you gave back something there. And I said, you're up in a stratosphere here, and you're over Bollinger Bands. You're probably going to pull back into it. I don't expect it to stay over it. And that's basically what you're doing. But the market has latched onto the band, and that part is very bullish. And in addition, you're overbought. Now, overbought isn't embedded. If it were embedded, I'd be a lot more juicy with what I'm talking about here. But you can see how the market is sitting there. The gold-silver ratio coming down to 80-31. This should have been colored in silver. I don't know why it didn't take, but I probably saved it wrong. But the lower it goes, the stronger silver is relative to the gold market. And in the silver market, first thing, you're in overbought territory. You're now, for the third day in a row, trying to be over, because remember, we're into the Tuesday session, over the upper Bollinger Band. You can pull back from there. For those of you that just saw my silver report a week ago, tell me that that report didn't do its job. This market has taken off. I was looking for the 34 to 3,500 level overall. We're at 3409.5 if you take a look at where the market's at. If you look at the copper, we had a bounce today early on. What China did over the weekend is they cut the 1-year and the 5-year key interest rates by a quarter point, each of them. The market was looking for them to do 20 basis points. They went a little bigger. However, this isn't what the market's counting on. The market is counting on something big in a bazooka. That is that they come out with a fiscal policy. We know what the monetary policy is now. They're going to contribute X amount of yuan, a couple of $100 billion that they're going with. Market may need more than that for local governments. And that's what the market keeps looking. And it's why you get up and the market sort of rejects it after a short while. Let's see if I can get this to come back one day. It's not, wait, one more. I think it'll do it, this one. Just doesn't want to come back. It's staying. But you opened, you got up nice and high, and you gave the whole thing up during the day. In platinum, you got up pretty close to the Bollinger Band. I frankly thought the market was going to run out of steam on Friday. And it certainly didn't hold it much better. I didn't think it was going to use up its power and hit the Bollinger Band. Why? Because you were already getting overbought, and that's what I said over the weekend. As it turns out, I wasn't too far off the money, but all of these metals are in uptrends except copper that I've showed you. In the dollar index, whoa, the combination of a strong economy, the combination of looking at the presidential election, the combination of high interest rates when everybody else is talking of cutting rates and we're still waffling, does the Fed really have to go a quarter point in November? Now, the majority thinking is that they'll do that. I'm not in that majority yet. I'm sitting back and saying, I question why they should go. Maybe they should wait for December and see what happens. Number one, it takes them away from being politicized in any manner if they do that. And I realize the election will have come and gone, but just how these things work and what people say. And then if December, if they have to go bigger, they can go quarter, they can go half. That's just my thinking. We'll see. But you're embedded. And as long as you're embedded, it's the strongest technical signal I know. And when that happens, the traders just buying these markets and they're looking for them to go. I don't know if they can get up to the upper Bollinger Band or not. There's some window envelopes you got to be looking at in here. Or you got to be looking at the other side of the market, looking at what currencies maybe you want to be short versus the dollar. But either way that you go about it, please understand my special report is up on our website, iraepstein.com. You can also click up at the top here. You'll see an icon. Give that a click. It'll take you to our website and take a look at the report. It's only up for 3 business days. It will go off at 11:59 p.m. on Wednesday. I checked what the computer's got it set at, so that's when it will be off. I'm Ira. You take care. I'll see you in the morning.